Hi, everyone, and welcome back to Machine Dreams, the show where you get to see what's working in AI today, what's not working, and what's next. My name is Kolawole Samuel Adebayo. I'm a technology analyst and Forbes columnist, and I'm joined as always by my remarkable co-host.
Hi, everyone. I'm Leah Stern, a global communications strategist and venture capitalist. Hey, Sam. How you doing?
Hi, Leah. How you doing? So good to see you. I'm sure that everyone must be wondering why I'm always calling you remarkable. It's in fact because you are remarkable.
No,
So
you're remarkable, and I appreciate that. You're catching me now. I'm on the road. I'm traveling. I'm not with my usual background, so forgive me. I'm far from home, but that doesn't mean recording stops. Today, we're joined by Judah Taub, co-founder and managing partner at Hetz Ventures. Hetz has just closed a $140 million fourth fund raised during wartime and a period of real global uncertainty. With this fund, the firm now manages close to $500 million in assets just 8 years after it was founded. Judah has built Hetz through some of the most challenging and defining moments for the Israeli tech ecosystem. And today we're looking forward to talking to him about that journey, how it shaped the way he invests, how he thinks about AI, and what he believes comes next. Welcome, Judah, to Machine Dreams.
Hey, great to be here. Thanks.
Thanks again, Judah. I think one of the biggest conversations that we're seeing, that I'm particularly seeing in the AI space is the conversation about, funding and where you get the real ROI out of AI investments. And I just saw a report recently that said that investors were pulling back on AI spending. And there's no better person to ask this question. You're in the space, you're seeing a lot of the trends. What are some of the biggest questions that investors are asking today that they weren't asking 2-3 years ago when ChatGPT just popped into the scene?
Okay, so where I think we are in the cycle today is a bit like the internet in 1995 or 1997. So everybody knows something big is happening, but most of the value hasn't yet been created. So we're now arguing about which browser you should be using. So it's really, really early on. We're seeing lots of demos, but not many durable businesses. And so you have a lot of investors who are worried that if they don't invest in some of the Googles or Facebooks of tomorrow, they're going to miss out. But at the same time, there's a lot of businesses that we're learning are not going to be the Googles and Facebooks, but actually a long list of companies that they thought were going to be big in 1995 or 1997 and turned out to be like a hype that only a few years later weren't relevant for the internet era.
And Judah, you've had some big wins, some amazing investments between Fund 1 to now Fund 4. What are some of the highlight sectors, companies that are really getting you excited?
Yeah. So one thing that has changed for us is actually the opposite of many other VCs. Most VCs over time become broader with their scope. They add on sectors. And in our case, we've actually become more focused. We think there's a global trend today where you basically have these large VCs that are getting even bigger. They're becoming asset managers more than venture capitalists. And what we have tried to do over time is become even more focused to justify our place in the world and really carve out what we think is a lucrative piece of the market. And for us, that lucrative piece in the Israeli market is a crossover between Israel, seed, and very specific verticals that we call infra software. So it's infrastructure software, typically things that you either sell to a chief security officer, cyber, things that you sell to a chief data officer, which would be things like different infrastructure data plays. And obviously there's a lot of cloud and AI that are bundled into that. But the areas that I'm more excited about are deep software plays more than high level application wraparounds of an LLM.
You know, we've just talked about AI pullback on AI spending, right? But I'm curious to know what are the areas where investors are still willing to fund AI deployments, AI projects, AI pilots, and so on.
So yeah, for the record, I disagree with that. I think the spend on AI is not going down. It is going up. I think people are becoming wiser as to where they want to spend. I speak probably once every month with at least 10, maybe more, heads of AI of S&P 500 companies. And I have yet to meet somebody who says that my corporation will be spending less in 26 than they were in 25. What you do see is where they're spending is changing. And the smart venture capitalists are adjusting to that as well. So a variety of, again, app wraparound LLMs, a lovable of 2026 would find it hard to get off the ground, even though they're today seen as one of the biggest successes of the last few years. So I think we're moving down to deeper software, even though you will still see some application layer successes.
And from your vantage point, what is it specifically about the Israeli ecosystem that continues to produce companies at the frontier of AI and deep tech?
Yeah, so I don't think Israeli companies do well at everything. Sometimes people sell like whatever it is, it's must work if it comes from Israel. Like I'm a huge fan of the Israeli ecosystem, but like most places, you're good at some things, better at some things, and less so at others. So in Israel, you have a combination of really, I would say today, 3 key factors, which together create this network effect. So the first one is you really have a truly inspirational group of entrepreneurs. And that's not true to a specific sector. It's true to the people. If you spend time here, you'll hear the willingness to take risk, to jump in at the deep end. I did this a bit in the UK beforehand. Here, I would say it's really apparent that the ecosystem is behind you and pushing you to take risk. So that's number one. It's the people. The second 2 things are more sort of sector focused. So the first of the 2 is you do have a lot of real expertise in specific domains. So whether it's from the military or from other backgrounds, like every year you have at least 1 or 2,000 new high quality engineers, typically sort of deeper engineers than just like Python application layer engineers, joining the market with real hands-on experience. And that pushes the market forward, sometimes with unique expertise from their background. And then the final one is just the large corporations that keep setting up offices here. Throw a dart at the board with all the S&P 500 names. You're likely to hit one that has offices in Israel. Not only will they have offices in Israel, their offices in Israel are probably doing something in infrastructure software. So a mile away from where I'm sitting, I can see it out the window, are the headquarters of Amazon, Facebook, Google, you name it. And they are all doing here infrastructure software. And the combination of those 3 things is very powerful.
Great. So back to what you said about your disagreement with the statement that AI spending is actually going down. Rather, you're seeing people getting wiser about where they are committing their funds, right? So that sort of, for me, ties into the broader conversation about AI bubble, which has divided the industry. There's some who think, that's a myth. There's some who think there's no bubble, or there's a bubble and everything's going to burst soon. And I think we're at a point where the conversation is perhaps even overflowed. But what's your take on that, really, the bubble conversation?
So there's 2 separate things which I think is worth unbundling here. I remember when, I think it was Dropbox went public. They went public at a certain valuation. I can't remember the number, but let's call it $10 billion. And over the next couple of years, their revenues went up like 100-fold. But their valuation stayed the same. So the spend on Dropbox went up dramatically, but that doesn't mean the valuation necessarily went up as well. So I think there's 2 separate conversations today. The first one is, will the spend on AI go up? In my mind, there is no shadow of a doubt that it will. Look at the number of jobs. People are worried that at some point, and you can see it with the number of open jobs today at Google and Meta, etc., the number of open jobs have started to plateau. Why? Because they're able to spend more on AI instead of people. That's a big conversation we can have, but I think the spend on AI will definitely go up. Speak to an S&P 500 company. I'd love to meet one where they would say the spend on AI is going down. There's a separate conversation, which is I think what you're alluding to now, which is the valuations too high? Is that piece a potential bubble? And here, I think it's a mixed bag. I think we have some companies which are definitely overvalued. Behind closed doors, you can hear that they're starting to squeak. Okay. And like, you can imagine which are the ones like that, but there's some real value there too. And so one of the questions some people ask is, are we going to see a .com bust like that? And I think there is a chance that some companies will blow up in the negative sense, but other ones really have some impressive underlying sort of economic attributes, like revenue, like multiple on EBITDA. And like when those are strong, like it says something about the business.
It's so interesting. Talking about fundraising, because you have quite a lot of experience, you've fundraised during a war, during global economic uncertainty. What are the lessons that you learned going and trying to do that in that kind of climate? Anything you could take away to our viewers that would give them an interesting perspective?
Yes. So I'll mention one. I think like every founder, you have to decide what is the core values that your firm stands for, and what are the things you're open-minded to changing. And these are things you should decide irrespective of external pressures. And so if you're a company that your mission is X, you shouldn't be changing your mission because your new board member says, well, etc. But there's maybe other things like your go-to-market, which are more open-minded. And so during the war, and just sharing here, we have a pretty international and mixed international LP base, including a lot of Europeans and a lot of sort of US institutions and etc. You never know when you're about to sort of fundraise how it's going to go. And so everybody at the beginning is saying, yeah. But when you get close to it, you actually find out who's willing to, during a war period and a nerve-wracking period, actually sign the docs. And we started getting hints to maybe pull back a little bit on our Israeliness, to put it lightly. And there was a variety of different recommendations. Maybe it should be called a European fund. Maybe it should be called a global sort of early stage fund, and it will help us get through our IC. And it really goes back to what is the core mission and what is a feature that you can tweak. And sort of, to be fair, it wasn't a discussion even. Like we just laughed at it internally. We're like, this is like, we as Israeli as it can get. It says Israel on my forehead when we walk into a room. It's not like we're hiding behind something. And actually that paid off big time. It paid off big time because we ended up with an LP base that really believes in what we're doing and not just in the returns or short-term stunt that we're doing. And I think as a result of that, we're really positioned well for the future.
Great. For investors who are probably watching this right now, what are the signals to watch to separate durable AI returns from, inflated expectations?
Okay, so there's a lot there, but I will pick two. So the first one is it's very easy to build an AI company. There's actually been AI companies built by a single developer that have done really well. And like you guys have probably heard of a bunch of them. For me, a core question is this company one that's going to be disrupted by GPT-X? So GPT-20 comes out. Who knows what it's going to be able to do? Will GPT-20 potentially make this company obsolete? Or does this company benefit from a GPT-20 coming out? And I'm putting aside the companies that are actually building their own LLMs or their own sort of large language models or whatever that they're doing, just the ones that are trying to build within the AI context. So I am far more interested in a company that says we are net beneficiaries of the new LLMs and they can explain to me why. And this is going to help our business rather than put us out of business. So that's sort of one factor I would sort of look at. And the second is I think investors are becoming wiser, not just to your revenue, but the color of your revenue, if that makes sense. So too often people just say, I'm looking for a company that's gone from $100,000 to $1 million in 12 months and then $1 million to $10 million. And in the AI world, you can see those. You can see quite a few of those. The color of revenue will give you an indication of whether this is durable and whether this can continue. And like a good example for that is to trade off and like in a big way, compare Anthropic's revenue to OpenAI's revenue. Anthropic is going to be B2B. And my prediction there is you will see that far stickier and far more durable than some of OpenAI's B2D or B2C revenue, which even though it's much bigger, is coming under pricing pressure and other reasons. So another point I would recommend is, aside from the first one, is try and get into the color of revenue or the color of potential revenue if it's an early stage startup. And I think that's an indicator.
Looking forward, what are you most excited about to invest in? I mean, I know you highlighted specific sectors within AI, but if you had to highlight one or two companies that are getting you super excited, what do they do?
Okay, so I have obviously a lot here. I will pick 2 points. So the first one is I will name the type of companies. And here I'm going to go sort of far left field big. But most people still call it LLMs. I did it myself like 5 minutes ago. And actually that's not sort of AI. There was the innovation of transistors. It came out of a variety of papers, and then LLM started. So it's large language models, but there are a number of companies who are doing large something else models, and they're not necessarily feeding in just language, meaning text from the internet as the feeder into these models. And so to give 2 examples, there's some that are doing it with videos and images, and they're becoming much better than any sort of GPT model or any LLM at that type of data. We're seeing the same thing with tabular data. So it's large tabular models. Tabular models means in like Excels and documents that are sort of tabular built. And they become sort of really impressive for things like predicting mortgage rates and predicting churn and CAC. And that's like very big for example, the finance industry. So I think we're going to start seeing a fragmentation, not just large language models, but large something else models that could potentially be much bigger or make people think, oh, wow, that's really cool. I never thought of that. So that's sort of one. And then the second one, I just think we are just scratching the surface with AI. I'll go back to what I started with. Like the year we are in, if I compare it to the internet, and it's easier to compare it to the internet than the industrial sort of age, because to the best of my knowledge, none of us lived in the industrial age. But if we go back to the internet age, then like this is 1990, sort of the late 1990s. And so like we sort of know it's going to be big, but predicting from where they were in sort of the late 90s, where the internet will lead, would have been borderline impossible. Like mobile phones, like weren't even a thing, never mind a smartphone. And so I think in a sort of real way, we are at that sort of moment where a small fraction of humanity has realized there's something called the internet, and companies are starting to think about what their business might look like with it. And in 10 years' time, I think the most innovative things we'll be using are things we haven't yet thought of right now.
Judah, you've said a lot of interesting things there. You've talked about large something models. You've talked about how we're barely scratched the surface of what AI can actually do. And I think the last question really is going to tie into that. If we're sitting here 5 years from now, what do you think we might realize we misunderstood about this moment in AI?
I think, again, it's going to come back to how little we knew. I think, I mean, I get to speak to really people at the cutting edge, and it's a bit like maybe, I don't know, I find that when I go to a doctor, if you go to a doctor just starting their career, they tell you exactly what sort of issues you may or may not have. And actually, it's the ones that are with a lot of experience. They've got the confidence to say, look, I really don't know, but I'm going to guess here. And my experience is telling me X. And I think the people in AI, actually the junior ones, are predicting the future with like 100% certainty. And when you go to the people who are literally in the labs, at the cutting edge labs at MIT and at Stanford and at Oxford and at Weizmann, you'll hear them say, like, I have no clue where this is going. And some of the things that today seem wacky just could happen. And it's the fact that this is exponentially growing. I mean, it's really hard to quantify or to imagine something exponential and the effects of it. But when something moves in an exponential rate, the effects in such a period of time as 5 years could just be enormous. So I would carry on betting on something left field, making a big difference. I mean, just if I have to give one final example, the number of people who were asking me only 3 or 4 years ago, Google is so big, nobody will be able to disrupt them. And like Google search is impenetrable. And then along comes a startup, which is not even 5 years old, and puts the entire stock market and Google search into question, whether OpenAI win or not. That should be a proof that in today's age, something can happen from left field and just be an earth-breaking, sort of shattering moment.
Thank you so much, Judah. This was really an exciting, insightful conversation. I think it was a really clear-eyed look at where AI holds up right now and where it doesn't, and what the future might hold. So thank you so much.
Thank you.
And thank you to everyone listening. This is Machine Dreams, more honest conversations about how AI is in every aspect of our lives. Please share and subscribe, and see you next time.